Let's go. The Compound and Friends. Very special guest, second time on the show.
Thanks for having me back, Josh.
You did so good last time that we said let's get him back ASAP. Jeremy Schwartz is in the house. Indexing fans, Wisdom Tree fans, you guys know and love Jeremy. How long have you been there, by the way?
Wharton fans.
17 years.
Yeah, Wharton fans,
Tons of
podcast
Wharton
fans.
fans.
You do a lot. How many years?
17 years.
How old were you when you started there?
20.
Do the math.
Back about 24.
All right.
Wait, you're 47?
Wait, that's not how it works. That's not how it goes. So you started there at 24, but you were working with Professor Siegel when you
Yes.
were in school.
So starting with Siegel, now
Yeah.
20-year anniversary we passed this year. Siegel joined as a senior strategy advisor, invested in the firm. I was basically the fourth hire, now the second longest at the firm after our
Wow.
CEO, John Steinberg.
Dude, unbelievable. Siegel is a national treasure. Can I say that?
What a mentor. I mean, I couldn't have had a better person. You know, we talk weekly on our radio show. I mean, I've stuck with him for 20 years. We're working on another version of Stocks for Long Run right now.
Yeah, I heard you basically wrote the first one anyway. Is that true?
Future for Investors was my project at Wharton. So I helped the 2005 that came out, and I took off 2.5 years of my life to do that book, basically.
Right, but that book. All right, so Siegel has the last laugh because there was a moment in 07, 08, 09 where people were like mocking stocks for the long run.
Yeah.
Like, LOL, you look like a genius, but now that's all dead and the 60-40 is dead and stocks are dead. And
That's right. People were laughing at him.
he
and then-
should just be
Yep.
people.
And he's not like
was
people
aggressive.
give him the permeable.
He should run around.
They give him the permeable reputation. He tries to call it like he sees it, and most of the time it's stocks for long run. But right now he's been saying he was worried about inflation. He was worried about this Powell pivot that actually happened this week,
Yeah.
and he's been calling for like a 10% correction. And so he's not always a
Well, I
permeable.
like that you could be a permabull and still say, I feel like the market could correct here for this reason. I like the fact that you could just be bullish, but then there are periods of time where you say, okay, this is too much. And he famously did that in the year 2000
Yes.
with an op-ed that is probably one of the most prescient pieces of reading you can do, or prescient pieces of writing you can do as a person in this industry.
And it happened when I was at Wharton. I mean, so that talk about lucky timing of me getting to Wharton, he becoming pretty famous for that op-ed, March 14th of 2000.
Is that what put him on, like really, really put him on the map?
Stocks for Long Run came out in 94, and
Okay.
that op-ed came Big Cap Tech Stocks, Suckers Bet, March 14th of 2000.
And oh my God, the NASDAQ subsequently fell 90%.
Yep, he had
Could not have made a bigger call.
and so he was saying the rest of the market was okay, you know, at more reasonable price. That's what got him on his journey to value investing, which was what the Future for Investors is about. How do I protect from bubbles and rebalancing to dividends?
What does he
earnings?
think about current valuations and like the makeup of the market? Like,
Should we just throw you out and get him here? Like, what do you think?
I'm curious because he's been around for a long time, and a lot of these metrics like just are different.
The thing with the metrics, so his stocks for long run was stocks did 6.5, 6.7 over his 200-year period. Bonds did like 3.5. So he had like this 300 basis point equity premium over bonds. Today, bonds, the 10-year TIPS yield, which is what he would say is your forward-looking after inflation, that 6.5% is an after inflation number. So you compare stocks as real assets, earnings grow with dividends and inflation over time. So you got to compare them to TIPS yields. That TIPS yield is -1.
Wait, compare them to TIPS yield versus what?
Earnings yield. So earnings yields being the inverse of the P ratio. If you go back, why did stocks return 6.5 to 7? It's because the P ratio was 15 over 140 years. So 1 over 15 is 6.5. It's not an accident that the earnings yield was the predictor of the real return.
Do you have to add in dividend yield and buyback yield?
The dividends and buybacks come from the earnings yield. So you just look at the inverse of the P ratio. If you look at the total market, like obviously subsets of the market can grow earnings faster than the total market.
Okay, so the TIPS yield is -1%.
Even less.
Right. So you're losing money in inflation.
You're giving the government $100, and 10 years from now, you get $90 after inflation.
Okay, so by that metric, though, can't you basically justify paying anything for stocks?
Stocks are real cheap versus that. And that's the thing, is the equity premium, even though stocks may only return 5 after inflation,
Still better than negative.
it's better than -1.
Yeah. Okay.
Jeremy, the other day Josh and I were talking about this chart from Yardeni, this dividend chart.
Yeah.
And I said, like just a knee jerk reaction. If I had to show investors why they should think long term, this might be the one.
All-time high. Yeah.
This dividend chart.
Very stable. It almost never declines more than 5%. In 09, it declined 20.
To be clear, because podcasting is an audio medium, it's a chart of the dividend payout of the S&P. It's not a chart of dividend stock prices.
Correct. It's
Right.
it's billion. It's the
Yes.
billions of dollars that have been paid out from S&P 500 stocks going back to 1999, and basically absent the GFC, it's up only.
And even go back 60 years, it's only really declined 5% a few times, 5-6 times, and only 20% in 09, and it was all financials.
And last year.
Very small. It was
Right, but you
modest.
still- but you still had
it's
a
not even
drop.
5%. It was like
Yeah.
a few percent. It was not even. Like it was a blip.
Well, the government paid those dividends, so it worked out well. Somebody had to pay
The
them.
last thing on the single part. So he's been a proponent of unbundling the CAPE ratio and looking at a lot of the accounting rules changes. What does he think about the CAPE ratio today? Is it
I
like
should also take a bow for that, by the way,
yes? He was the only, I feel like he's the only one that did that work.
because I think it's universally acknowledged now that that number, in the absence of qualification, is completely useless.
Yeah, there's a lot of issues.
However you square U.S. stocks, they're not cheap. But I'm curious what he would think about that.
Yeah, I mean, he likes the methodology. It's hard to predict real returns, and he says valuations do matter. He's not saying we're going to get the same 6.7 after inflation that we did 200 years ago. He's more like 5% after inflation from where you are at the 20 P ratios today. So he's more of a forward-looking P ratio than a historical P ratio. But
Well, listen, I mean what I said. I think he is a national treasure. I think anybody that starts as an investor by reading his stuff is probably way better off
oh yeah,
than starting off reading market timing stuff, because I think he gives you that perspective that you need to like have that. You need to like understand that what this is really all about, and I think he gives it to you in a very easy to digest way. Right?
there's a chapter in technical analysis in Stocks for Long Run where we talk about sort of moving
remember that.
averages, and Meb in some of his tactical asset allocation has highlights this. Even Siegel talks about strategies that can cut drawdowns and
Yes.
things like that. But yeah, he is a Stocks for the Long Run.
Well, if you're going to have a bias towards something in this business, it might as well be toward the thing that we know works, right? Like just start at that starting point. All right, we're wildly off course. We actually have some very big news today, and one of the reasons we're so excited to have you live here on the show is because Wisdom Tree and Ritholtz Wealth are making a major announcement today. Major. Would you say
time.
this qualifies as major?
It does.
It really does,
Yeah,
right?
it does.
Much more for you than for me. I feel
Very,
like you
very
did-
proud of what we've done here.
You did like 99% of the firm's work on this.
That's a little high, but
I'm almost full-time crypto. It's sort of crypto for
Don't. All right, listen. Introducing, and we're not pitching product here today, but I think this is like a very important discussion. If you're involved in crypto or wealth management or financial planning or long-term investing, I think this is going to be very, very good for you to experience because of how much we've learned building this. But I'm here to introduce the RWM Wisdom Tree Crypto Index. That's what it's called.
it's exactly
Okay.
what it's called.
And a separately managed account or SMA strategy that we've built to work based on the index. Am I saying all these things right?
Powered by OnRamp.
Well, we're gonna get into the partners that we have on this because that's a really important part of why
Sitting
this
on
works.
Gemini.
So the RWM Wisdom Tree Crypto Index SMA strategy is powered by OnRamp. You guys have heard Tyrone Ross here on the show, CEO of OnRamp, and they have done an amazing job building the trading tools that are necessary and the visualization tools. What's the best way to describe their role before we get into
Who's
Gemini?
this?
OnRamp.
So OnRamp that's a good question. All right, so I would start with Gemini first.
Okay, so Gemini is custodian.
Here it is. Gemini is the custodian, and in this case, the exchange as well. Gemini is custodying the assets the same way that Fidelity does, that Schwab does, that TD Ameritrade does. OnRamp sits on top of that platform and executes the trades,
Right.
opens the account, does all the KYC checks, very similarly, but not exactly, to maybe how we work with Canvas, which is the O'Shaughnessy Asset Management Platform. It's basically a technology solution that sits on top of that sits on top of a custodian. So is like in the crypto world, is OnRamp like the layer 2?
That's a good way to talk about it. They are a connecting protocol. Like, so you
Are they
think about
Chainlink?
Well, wait, but
They
it's
are
also the
helping-
user interface. It's also how advisors see their clients' accounts and how clients can view their own assets and their own portfolio. That's all going through OnRamp.
It's
Right.
a platform that's connecting all the dots. So it's
Yes.
connecting to Gemini, it's connecting to the strategy the advisors go through. Integration platform as a service is a phrase Tyrone uses a lot.
Okay, that's perfect.
I pass.
Okay, so this is the first, to our knowledge, this is the first index-driven SMA strategy for crypto. So this is basically financial advisors who want to help their clients get exposure to digital assets in a evidence-based approach, which we're going to talk about the index and its construction in a minute. This is now Ritholtz Wealth clients only for right now, and then that will open up to all financial advisors, family offices, wealth managers, and their clients, we think, sometime early Q1. Do I have that right?
We're hoping.
All right, I don't want to overpromise,
Well, how about this? If you
but
are
it's open now for our
if
clients.
you are an individual investor who wants exposure to this, if you are a financial advisor who wants to allocate clients to this, we have a landing page. It is, what is the landing page?
Good question. Ritholtzwealth.com/digital.
So give us your email address, and when this is live, we will let you know.
Yeah. So, all right, let's get away from the salesy side of this because I don't want to turn this into a pitch. We can't pitch this because nobody can buy it unless they're already clients of ours. Talk about what went into the creation of the index and why this is so different from everything else that's out there.
Well, yeah, let's start there.
Yeah.
Why did we try and do this? What were we trying to solve for?
Well, first, it's still incredibly difficult to access crypto. I mean, the regulators in the US have a very different approach than the regulators in Europe. In Europe, you can launch ETPs, ETFs, baskets of and single and index baskets. We're doing that. In the US, they're not even getting to a physical Bitcoin.
There's no spot Bitcoin
There's
ETF
no spot
as of this
Bitcoin
taping.
product. And so when will they come up with a diversified index? It's going to be a long time before your traditional access vehicle. So you need to open an account at Gemini, Coinbase, somewhere and do it yourself. And individual retailers are doing it. They're doing it on their phones.
About $1 trillion or $2 trillion worth.
It's
Right.
just not in the advisor world, and so it's hard. So OnRamp does solve a lot of key issues of making all those connectivity points happen. They do the integration with the Geminis and allow the trading and the custody in a very seamless way. So I mean, Michael was showing me how it works for your clients, and it's amazingly simple. I'm going to become a client. It seems like in 2 days. Like it's a very easy process.
That's if we let you. So you can open an account on OnRamp in minutes, which is really incredible.
Literally.
The technology that Tyrone and them have built. So what's in the index and why is it set up the way it's set up?
So let's start with this. What we didn't want was a straight up market cap weighted index.
Why?
Because if you do that, you're at 60% Bitcoin and Ethereum. Is that about right?
That seems about right. Yeah.
But that
A little
back
bit
test
more.
looks fucking awesome.
Oh, I mean, a back test of any crypto exposure looks awesome.
I can't get the back test. I have to only get the forward returns. So Bitcoin probably won't go up 36,000% again the way it already has. It would be very unlikely for that to occur again.
We don't have the ability, nor do you need the ability, in my opinion, to pick the winners. I think what you want is, if you believe in cryptocurrency, just generally, that the space will be bigger in the future than it is today, then you want beta. You want broad exposure. You don't want to bet on which King Kong Godzilla, which is going to be the winner. We will institute the index, and then we will set it free.
How many coins are in the index?
We've got 13.
13 today.
Where did those come from? Why those 13?
So we try to get diversified exposure to a broad cross sections of themes. So yes, we have overweights from the other 11 coins to Bitcoin Ether. They deserve the bigger spots. But we are capping it. It's today 56% between 36 Bitcoin, 20% Ether, and then it's essentially 4% allocated to the other 11 assets.
So because one of those other 4% weightings 2 years from now could be a 20% weighting
Or zero.
or zero fall out of the index. And we don't want to try to guess. We just want to make sure we're there.
Yes.
Okay.
And so we are trying to get broad diversification of themes. So you hear DeFi. DeFi is one of the biggest applications
So
of
hot,
crypto.
so hot right now.
Well, this is a bit seriously. If we can't even get a spot Bitcoin ETF, when are we getting DeFi exposure for investors?
And it solves a lot of challenges. I mean, you hear about the interest rates and the lending and the borrowing rates that you could get through DeFi. And there's a lot of interesting yields that you can get there. So when interest rates are 0, yes, they're going to go higher next year. That's part of our worldview, but it's still going to be like 1-2% on the Fed funds. You could get meaningful yields on some of these lending arrangements, and a lot of these assets, whether it's Aave or Sushi or Yearn Finance, they all have interesting elements of adding in lending, borrowing, and
Okay.
And these
rates.
companies are literally minting money, right? Like, and I don't mean that. I guess I said literally. I don't mean figuratively. They are making so much money through these protocols.
So it's hard to do a fundamental analysis. Not that people shouldn't try. It's hard to do fundamental analysis the way that you would with a stock to come up with these 13 holdings that we have.
Yeah.
But you guys did build the criteria, and I saw how much work went into it, and I was blown away. You guys did build the criteria for which coins and why. And then this idea of letting it float
Yes.
so that hypothetically, is Solana in the index?
Not yet.
All right.
It's not because it's not a Gemini. But if Ethereum flips Bitcoin,
That's
we will
right.
flip. We will flip Ethereum higher than Bitcoin. We're going to let it go higher.
That's right. So there are going to be some coins that drop out because total value lock declines, the community stops using it, market cap, vanishes.
Yeah.
But then there will be some coins that 10x. And we don't know which. That's why when I say evidence-based, the only evidence we have is that crazy shit can and will happen, and it'll be very hard to predict in advance. So that's the idea of letting it float and accepting the returns of the beta. But
Right.
we're starting with that modified market cap.
And we do have 2/3 of the market. So in our 13 coins, they represented approximately a little bit over 64% of the total market.
That doesn't include. You're taking away the stablecoins, right?
Yes.
Okay.
This is of what we call the market dominance.
Why aren't we using stable coins? Because they're supposed to act like dollars.
There's no reason in this index. This is trying to get you the long-term
Yeah.
growth capital, and
Okay.
so the stable coins would just be it's like just a cash allocation, and so this is trying to get the growth of the crypto assets ecosystem.
Okay.
So the
Awesome.
biggest holding by far, as we already mentioned, was Bitcoin and Ethereum. We've got some other layer 1 networks. So that's like 2/3 of the index. We've got Polygon as a layer 2. We've got DeFi. We've got Metaverse. We've got Oracle in there. I don't mean Oracle, the publicly traded company. I mean,
It's a basically bringing the off-chain and on-chain things together and helping connect the actual real world with the
So
crypto
let's
world.
explain what that means. So let's say there's a distributed app where people are trying to make bets on the weather. Well, how do you know who to pay? Well, the way you'll know is that the Oracle token will come to the table with that information and say, yes, it was above 70 degrees 10 days in a row. The person betting on that gets that money. Or this particular coin is supposed to do this on a contract basis if something in the real world happens. You need oracles to connect things going on in the real world with data to the tokens that are going up or down based on that information. Is that a good way to phrase it?
I think so. I mean, the asset we have is called Chainlink. Link is the acronym
That's
there.
a pretty popular one.
It's in the top 20 in the market rank when we were looking at it. The use case we talked about was a insurance platform that uses their data to determine if the payout conditions are met. But so that's where it's using that the offline with the connecting the online to it.
when you say we, can we just talk a little bit about the digital asset team and what you guys are doing at Wisdom Tree? This is not just you and me picking names.
Yes, we have a big team. We've been making investments in digital assets. I mentioned we have products actually in Europe that launched this week. So we launched 3 different basket products in Europe. So we've been hiring against this effort. There's a research team focused on it. There's a broader than research team focused on digital assets and how it's changing finance. We could talk a lot more about that. But the committee is between capital markets. There's people who are involved in the trading side. There's people. The research team is 5 people today focused on crypto assets,
So you're used to dealing with stock nerds at Wisdom Tree, right? And I feel like you can kind of like you're the alpha, right? How insufferable are these crypto people that you've had to hire?
It's amazing
You okay
actually.
with that?
I
Yeah,
love
'cause
them.
It's remote. You don't have to deal with them.
They are. So
Where are they? Russia?
We have a few people in London. One of my people is in New York here, who's working on it.
Okay.
So we got all over the world.
All right. I kid, of course. We love crypto people. I want to talk about John Steinberg's message to Wisdom Tree investors, which I guess this came out. By the way, Jono, that's
Jono.
like his. That's his
he goes by
nickname.
Jono,
Is he like Bono from U2?
Always done by John.
It's fun. All right. Jono told analysts on a conference call at the end of October when Wisdom Tree released its results. Somebody asked a question from Goldman or something, and his response was so powerful that you guys ended up turning into a blog post. Do I have that right?
That's right.
Okay. I'm gonna quote from Jono. I would say that I am now, when I do that with my voice, that's me becoming, right? It's the craft. Okay. All right. I would say that I am now personally all in on DeFi. I say that because I believe it's going to meaningfully change the user experience for the positive, and from a business standpoint, transform the economics of financial services. I believe that over the next 5 years, we will be recognized as a DeFi business that has an ETF business.
That's big.
That's pretty. I mean,
It's a big statement.
so you guys are a DeFi company now.
Well,
This
and-
isn't marketing. He really believes this.
No, this is the future.
Yeah.
As we mentioned, digital assets. We're hiring. There's over 10 people focused just on digital assets. A lot of people are wearing two hats, but they're now focused on digital assets. Mike knows Ryan Luvar, who's our head of legal, who's working on all of our applications with the SEC, but now focused full time on digital assets. Will Peck was made head of digital assets in the
All right,
U.S.
nobody knows who these people are, but this is
Yes.
top down.
So the focus is, it's hard to see it today because you see the ETFs. We've talked publicly about having a Wisdom Tree wallet. We are going to tokenize a lot of different assets. We have a filing for a tokenized treasury, which is essentially helping bring cash to the crypto ecosystem.
Okay.
And you can say, well, people have treasury funds today. Why?
Are you going to mimic the yield of a treasury in token form?
It's going to own treasuries, physical treasuries
You're gonna
on the blockchain.
pass along the yield of those treasuries
Think
to
about-
the token holders.
Think about money market funds and all the fees they charge, and
Right.
think about putting it on the blockchain, how costs can come out of the ecosystem, and people who are in the crypto ecosystem who look at some of the cash products today where you don't know the assets behind it. There's
Do you want to say Tether? You could just say it.
Tether and others.
Okay.
Are they transparent with their assets? You will see the treasuries in the fund every day.
You can't be transparent if you're paying an 8% yield. Like, let's be honest with each other. You can't say what's in there. You either want the yield or you want the transparency. You can't have both.
Yeah, well, this is going to be traditional cash, right? So, or treasuries.
Right. So
but-
you're not paying a high yield on
Yes, no, this is
a
just
treasury token.
this is just a treasury. This is U.S. treasuries.
Okay.
What's
floating
the
rate.
advantage of
Why
having
hasn't
treasuries in a
the
token?
government tokenized the treasury yet?
Well, there's all sorts of studying of they eventually will. I mean, you see China talking about the central bank digital currency. There is a process studying central
That's
bank
the
digital
dollar,
currencies
but I'm
everywhere.
talking about the treasury. Like, why wouldn't they have done that yet? It seems easy.
The
Maybe there's
governments
they don't know
are
that
slow.
there's a demand for it.
Governments are slow. I mean, that's why private enterprise will do it first. I think we will be first with treasuries on the blockchain. And
Let's talk about being first. I think in your space, in ETF land, in asset management land, there is a huge premium for first in so many examples. Not
Yes.
always. So, all right, this is back to Jono. Said a different way, Wisdom Tree is in the business of transparent exposures, whether we're doing it in regulated tokens or through ETFs. I think they'll prove quite complementary. We are 30 years into ETFs, and yet the mutual fund industry is still very, very strong. I remain bullish on ETFs. But when I think about where Wisdom Tree stacks in the competitive set, we were early in ETFs, but we were 13 years after State Street and 7 years after iShares. Here we have a chance to be first. Why is that so important here?
that point, the first mover, it's hard once you get awareness and these people start trading a certain instrument. It's hard to get off that. Why is the SPY?
You become the conservative option, right?
It would develop its own liquidity ecosystem that's sort of like a moat. That once you know you're trading a certain ETF ticker, even though other things become the same thing but cheaper, it's hard to get people to trade the new ETF.
So, Jeremy, you're the global CIO. Congratulations, by the way, on that.
Thank you.
When did they name you that?
Just in the last few months.
So you obviously talked to a lot of.
What were you? Wait, what were you before?
I was global head of research for the last.
Okay. Well. So
numbers.
did Siegel get demoted? What is
Siegel
he now?
is always a senior investment strategy advisor, so he's always been a consultant
Okay.
to the firm.
Good. That's great. Congratulations.
So you're in the room with people that control a lot of money. When you're talking about all this whole strange new world to people, do they laugh? Like what's their reaction? Do they look at you like you have 10 heads?
Not anymore.
So it depends what world you're in. So like Tyrone and I were at an event in Austin with 20 different banking
That was like
executives.
the Illuminati type stuff, right?
It was a really closed circle table of a lot of senior banking executives, and for that world, it is like you're talking another world.
Was
Like,
Jamie Dimon laughing at you?
they're not there, but that it's
Who's there? Like what level at the banks are there?
head of wealth management at a bunch of these banks.
Okay, got it. And what do you? So you and Tyrone are jointly presenting, or you're
Talking
just both?
crypto, we were both there. So
Okay.
it was educate us on digital assets and where the future is going.
These banks don't have internal people doing that for them yet. Is it that early?
It's far. So
It's not unbelievable that like they don't have their own internal.
Here's why, in my opinion, it's not that they're asleep at the wheel necessarily, but their crown jewel is like trillions of dollars, and regulation is just not there yet for them to make a move.
I agree with that. I think that's one of the main reasons why, when you go into that room,
Like they'll get there, right? They will
will.
obviously get there. They're going to be late, but whatever, they'll get there.
yes.
is every question they ask about regulation.
It's when will the custodians be at a level that they are looking for? I mean, that's frankly some of the regulator questions on even the ETFs is over the custodians and are they following the same protocols that they want from a 40 Act perspective?
Right.
And we think it's getting there. I mean, we think Gemini is there.
As long as they keep asking those as the questions, it's still early. Like I don't see how this could top while the main players in the industry
Haven't even
are
gotten in.
still preoccupied with like only the potential negatives.
So this is why I'm bullish. It has not forget about, but just hold aside the whatever libertarian bent, inflation hedge, all that sort of zealotry type stuff for Bitcoin. Hold all that to the side. It's just, in my opinion, a very simple matter of like demand. The demand is coming in a big way. And so it is possible that prices have mostly pulled that forward. That would be unusual for prices to top before all of the demand comes in.
I think there's a trillion. I think next year another $1 trillion comes into crypto from wealth management
$1 trillion
and institutional asset management. Yeah, I do. I think mutual fund money, hedge fund money, wealth management money.
So
about
is
$1 trillion.
all right, let's just say that Josh is off by
Well, it's
3x.
what is it now? It's 2.5.
So let's say he's up by 3x. Let's say 300 billion comes in. Is it possible for all that money to come in and the price to go down?
No. The
And-
only way prices go down is if you invent 50 more coins and it dilutes.
So, but here's the thing with getting back to Bitcoin is that even if you think that Bitcoin is not the king in 10 years, maybe it is, maybe it isn't, that's where the money is going today, right? When new money comes into the space, they're buying Bitcoin. They're not buying Aave or Uni or whatever. They're buying Bitcoin. That's it. Who knows what that's going to be in 5 years from now? But
do you agree with that?
Well, it's the
I'm not
easiest
sure.
one to start. I mean, so there's retail who does all sorts of things.
I'm
right?
saying an investor's first dollar into the space, where is that going?
What kind of investor though? Professional investor?
It doesn't matter. Yeah, institutional investor.
Okay. What do you think?
It tends to be that path. It starts. I mean, my personal path would start with Bitcoin, then you go to Ether,
That's all-
and
that's all of
then,
us.
and then
Okay.
you do other things.
It's Bitcoin to Ethereum to whatever's list. Now, but here's another thing that's important to
Like,
mention.
all right, what else you got?
Yeah,
all right, I'll
exactly,
take
yeah.
a little bit of that.
Yeah.
Well, that's where the diversified index is.
And then all these
critical.
dollar coins are like the pack of gum at the register. Like
Yeah,
you,
give me one of those.
You got a flat screen TV in your arms, you bring to the register, and then there's like, oh look, cool, I could just buy this $5 thing also because
But as amidst our bullish sentiment, I think we also have to say that I'm not positive on anything in life, but and I'm not positive on what I'm about to say. I'm confident. I'm fairly confident that the cryptocurrency space will be bigger in the future than it is today. However, I'm much more confident that it will crash between now and then. Like if I had to say if I had to place like varying degrees of confidence, I'm much more confident that it will get cut in half from today's levels
crashes every 18 months.
than the fact that it will be higher in 18 months.
I mean, it just crashed 50%, and it's already come back.
When did that happen? This spring? It crashed with the meme stocks.
It went from 60 to 30.
Yes.
But my point is,
Oh, because of China or some shit.
Elon started it,
Elon.
then China. But my point is, people, I don't think you should necessarily invest as if it's going to zero. That was cute. People used to say that because it's not going to zero. However, you should invest as if it's going to get down 50, maybe 70%.
Yes.
Now, my personal opinion, that's just a good way to set like a realistic like position size so you don't go crazy. I personally think that the floor is higher given all of the demand that's coming online. So I think a 70% crash is unlikely.
Yeah, but wait a minute. Does that demand stay strong if there is a 50% crash?
The reason why I think it does is because these gigantic ships in the ocean have already turned. It's too late to go back.
Who is that? JP Morgan,
just
Fidelity.
all of the institutional money. Once they have committed, they have months and potentially years of board meetings to make a decision. Once they decide, they're not going to get scared away, I don't think, by a 30% correction.
Do you know about the crypto sprint? We get into this?
Hold on. Just Jeremy, do you agree? Like, if prices fall 30%, do you think everybody's be like, forget it? Like, they know it's crashes. I hope it does.
All this stuff can be anecdotal, like what you hear, what your friends are doing. I mean, my brother got into Bitcoin before I got into Bitcoin, and he's like younger. He's not a stocks for long run guy. He holds Bitcoin. Like, he's part of that new generation.
He's a Bitcoin for the long run
and
guy.
He is. And you talk to him, and I'll ask him, so do you think the demand can ever peak? Like, don't you think there's at some point all the buyers are in, and then there's who are the additional buyers?
This is your brother talking, or you?
I'm asking the question.
Got it.
I'm saying, like, so is there
What does
a
he
point
do for a living?
He's been a tech guy.
Yeah.
So he was early in internet marketing, and now he's doing
Retired.
a platform in real estate. But he likes crypto.
Okay, so how does he answer that question?
He thinks it's gonna be just long-term bullish. Like, there's no wavering of any falls. He's long-term bullish.
So a lot of, you saw who did this paper? Was it Bitwise that somebody did compared it to the internet, the early years of the internet? I can't remember. Maybe it was great. I can't remember. Doesn't matter. And they think that like this is the new financial system is being built right now.
Well, it is very similar to the early days of the internet. The difference is you could not invest in HTTP or SMTP, the mail protocol, or Java. If you wanted to invest in Java as a programming language, you had to buy Sun Microsystems. If you wanted to invest in HTTP, you had to buy Netscape. Like, there were corporations on top of these protocols, and now the protocols are naked. And
open source.
The bet that you're making is that more people are going to use this protocol, which will lead to more total value locked, which will lead to higher market cap.
Yeah.
That's not an unreasonable bet, but you have to get your mind around, hey, these fucking coins don't have CEOs. Here's what they have. They have a network or a community of people that believe in them. They have developers working with them. But in the end, it's a little bit like investing directly in a protocol. Like,
no, literally.
Literally.
So decentralization is not the answer for everything.
And not every coin is the same, right? So Bitcoin is different than Ethereum, and so Bitcoin is more of this alternative to gold, the fixed supply. I think of it as the millennials' inflation hedge and the digital gold.
Oh, I'm sorry to cut you. Here's what I say. It's not just institutional demand for the coins and the tokens that's coming in a big way. It's the venture capital money that is absolutely flooding into the space. I think
to build things based on it.
To build things. So forget about what we say. And not that you should take anybody's word for gospel, but Mark Andreessen has a pretty good track record for being ahead of the curve with this sort of stuff. He wrote about Bitcoin in 2014 in the New York Times. I laughed when I read it. I'm an idiot. But all of these people that are committing serious dollars, and when you hear the people, like I was listening to a Bankless podcast today, and one of the co-founders of Polygon was on. This dude is from whoever knows where he's from, somewhere in Eastern Europe. I couldn't understand a word he was saying, not because of his accent.
That's so bullish, by the way, when that happens.
Because he was talking in computer language, and that's not my language. Yeah. But Chris Dixon said, follow the engineers. And all of the smartest people are going to the space. And that is what has me more excited. Forget about the price. But that alone should tell you something.
Where do you get your information from on tokens, crypto, et cetera? Like, what are your news sources?
I mean, it's hard to go away from Twitter as a starting point. Even that's gonna be one of our topics.
No problem doing that.
So Packy,
I hear you. Packy,
Mario Gabriel, A16Z, Bankless.
Yep,
that's what I listen to.
Yeah,
and read.
So a lot of it I've been starting. It starts just.
Wait, are you on chain? Like, what are you doing?
What am I doing?
I don't know. Like, where do you get your news from?
I'm still a Twitter guy.
Okay.
Well, Jeremy's got a digital assets team.
That's
Yes.
true.
My team is on Twitter.
That's true. Fair enough. You have a decentralized team, though. So in many ways, you're ahead of him.
Not to
Right?
brag.
Right. You have a DAO, and he doesn't. Right. All right. You know about this crypto sprint thing?
So the regulators are trying to come together. I mean,
Yes.
you see even with ETF filings, it got rejected, but there was some a commissioner who wanted to re-review those kind of things, and so the regulators are trying to come together.
This is last Tuesday. U.S. financial regulators on Tuesday released an interagency policy agenda for regulating cryptocurrencies as discussions unfold about how to provide oversight for the booming market. The so-called crypto sprint, as officials call it, sketches out a to-do list for 2022 that will offer crypto players more clarity on the rules of the road. Who's in it? Federal Reserve, FDIC, Office of the Comptroller of the Currency, or OCC, and probably several other agencies. But they're going to start making rules next year. The shit is not going away. They understand that, and I feel like they're going to stop suing people and maybe start like deciding where the potential for harm is to consumers or whatever, and focusing on that versus closing their eyes and hoping it disappears. Is that the way you guys see it?
Well, it'd be nice if they approved the ETF of physical Bitcoin.
No, we don't want that now. We have an SMA strategy. We're fine now.
I think it's gonna be a long time before these 13 assets are approved in any traditional form.
Sure.
So it's for sure not. But you want to see them come around. I mean, you don't. I think that they approved a futures product, which has more issues in many ways than the physical product.
Yeah, we're not fans.
It's different issues, but in my view, more issues. Like I think it's worse issues. But obviously they have their concerns about the custodians and also.
You guys don't do futures based
We do.
ETPs, or you do?
We have a commodity. In fact, we actually were before the 100% futures were launched. We had a commodity fund, GCC, where we added a 3% position to Bitcoin. We were the first to do that, but not by a lot. So we were like a
Did
few
that
days.
take off? Did a lot of people buy that?
The fund has done better. I wouldn't say it's quote unquote taken off, but it has it's been commodities have been good this year, so the fund has done well this year. But it's nice that we were the first to have the Bitcoin futures, and we're looking to add it to other futures-based products.
How
as well.
closely are the futures tracking the spot?
The correlations will be extremely high. It's got
Directionally,
It's the
they're-
long term where the compounding of the contango is the killer. And so the cost of that futures curve, whatever that future curve cost is what will drag away slowly.
But what
over
if
time.
the slope of the curve changes to investors' benefit?
Well, then it could
What would have to happen for that to happen?
that people become bearish about the future and that there's
Out
no
of
leverage
contango
and-
into backwardation? Is that what you're saying?
Yes.
Okay. Does that typically last? Does backwardation in a market last?
It can happen. I mean, people used to talk about commodities as being naturally backwardated, and right now
With oil markets, right?
oil because there's so much demand for the physical and less demand for the storage thing.
Right.
There's always a scenario where it could happen.
So if everybody all of a sudden needs to use Bitcoin, like actually use it for something, there might be more demand for it now than there would be for futures that are 6 month or a year
Well,
dated.
the other thing is financialization always messes with commodity prices. And if we're
Yes.
calling Bitcoin a commodity, whatever, you can argue about it. But like, there's always funky stuff that happens.
Fidelity announces spot Bitcoin ETF in Canada. This is now the largest asset manager, $11 trillion company, now the largest asset manager to have a crypto fund. Fidelity's ETF is called the Fidelity Advantage Bitcoin ETF, FBTC is the ticker. It will directly obtain physical Bitcoin, meaning the fund will buy actual Bitcoin rather than acquire it through a derivative instrument. When you saw this news, were you like, that's a big deal, or there's already Canadian Bitcoin
A lot of
ETFs?
stuff you can. I mean, we have baskets in Europe that now have things like Solana in it. Like we launched that this week. And
Okay.
so the
But
European.
is that a big signal that when Fidelity does something, that's got to be like meaningful to people at Wisdom Tree look at that and say, okay, something big just happened, or no?
Um,
You like f- those guys?
No, I mean it's standard that a lot of people are going to come into this space, and now it's really the regulators today. That's the things that you want to see movement on. It's more
Right.
less.
So there was like a deluge of filings of crypto ETFs recently in the last like 2 months or so, and some of them are being pulled.
So the SEC commented on a recent application. They rejected it. We have the next application under review. So this month
Good
we
luck
have
with that.
we have an application under review. we
I know, I'm sure it's going to work.
yes,
Go on.
For what spot?
for spot Bitcoin, and we have
I hope you didn't spend a lot of time on that.
they spend a lot of time on that.
What comes first? Futures ETH or spot Bitcoin?
Very tough to predict.
Why is your spot Bitcoin ETF application different than the ones that have been rejected already?
There's all sorts of nuances. It comes down,
He doesn't know.
The team is working, and even more. There's gonna be more changes to improve that in the short future.
Okay.
But the question is, can you get to the SEC's and Gensler's concerns? And some of it's custodian, some of it's other things. And so we're working to be the first.
Eddie Elfenbein taught me a valuable lesson. If there's a question that you can't answer, here's the answer. It's very technical. You probably wouldn't understand.
Does that work?
Of course
in my-
not.
It doesn't work in my house. I'll tell you that. Hold on. No ETF issuer can answer the issue that Gensler has because
manipulation,
the
right? That's-
underlying is the problem.
He's worried about manipulation in the Bitcoin market.
It's hard to pinpoint
Opacity,
to
concentration, manipulation, everything that a
what does
regulator
that do-
should worry
what does
about.
that have to do with
a
an
regulated
ETF?
exchange. So the question is, the futures are under CFTC,
Right.
and
So they know there's
is there
somebody
a
in charge.
regulated exchange that trades the crypto? So that may be forever, right? So that's where these things may be a long time before
Yeah.
they're approved.
Stocks like GameStop, AMC. There's never manipulation. in the stock
What are the
market.
exchange? Wait a minute. But okay, so what are the exchanges that are most likely to be deemed by the regulators as acceptable in the way that the CME is?
Coinbase and Gemini. Can they get there?
But so they're brokerages and exchanges. So that tells me that might be tougher, even though they're big and they're very good at what they do.
Yes.
So that might be part of the issue. Are there any pure exchanges that might be deemed as FTX is a broker and an exchange? Kraken is a broker and an exchange.
How long could they fight this for?
Long time.
Good.
What if they said
It's bullish for the RWM Wisdom Tree crypto
yeah,
index.
that's fine.
We are very bullish on that index.
It would be nice if we could be the only game in town for a little while.